Hello traders, and welcome back to Explain the Charts. Today is November 14th, 2025, and we are taking an in-depth look at Meta Platforms, ticker symbol Meta. There has been a tremendous amount of news and volatility surrounding the company lately, so let's first get a handle on the current events before diving into our chart analysis. The biggest story dominating the headlines is the fallout from Meta's Q3 earnings report back on October 30th. The company shocked Wall Street with a massive $15.9 billion one-time tax hit and revealed soaring costs related to its AI development. This news triggered an immediate and severe sell-off, with some reports citing a staggering $362 billion loss in value and fueling fears that the so-called AI stock bubble is finally bursting. Following this, the stock plunged over 11%, dropping from around the $750 level to below $670 in a single day. Adding to the bearish sentiment, just a few days ago, reports emerged that Meta's chief AI scientist, Yann LeCun, is planning to leave the tech giant, which caused another dip in the stock price. Despite this, some analysts are looking past the short-term pain, with consensus price targets from some firms seeing over 30% upside from these lower levels. So we have a classic battleground scenario, terrible recent news causing a sharp downturn versus analysts who believe the company's fundamentals remain strong, calling this a potential buying opportunity. Now let's look at how this news translated directly into price action on the daily chart. I'm zooming in on the period from late October through early November. You can see the stock trading calmly in the $730 to $750 range right before the earnings announcement on October 29th. Then, on October 30th, we see this massive bearish candle and a huge gap down at the open. The stock opened at $669 after closing the previous day above $751, a catastrophic drop that wiped out months of gains in a matter of hours. The selling pressure continued into the next day, October 31st, where the stock hit a low of about $645. This is a perfect example of how a negative fundamental catalyst, in this case, the earnings report, can completely override the existing technical trend. Zooming back out to the full daily chart, we can see the broader context. Meta had an incredible run-up, peaking at its 52-week high of $796.25 back in mid-August. From there, it entered a correction phase, pulling back to the $720 to $740 range, which acted as support for a while. The earnings disaster shattered that support, and the stock has been in a clear downtrend ever since. We can see a few attempts to rally, but each has been met with selling pressure, forming a pattern of lower highs and lower lows. The price tried to find a bottom around the $618 level on November 6th, but has since rolled over again. An important long-term support level to watch is the zone between $575 and $585. This area provided significant support back in March of this year, and if the current bearish momentum continues, it's a very logical technical target. On the upside, a key resistance level is the post-crash recovery attempt high around $640. Breaking above that would be the first sign that the bulls are starting to regain control. Now let's switch to the 1-hour chart to analyze the more recent price action from this week. This is where the news about the AI chief scientist leaving had its impact. We can see the stock was attempting to stabilize around the $630 level on Monday, November 10th. However, on Tuesday and Wednesday, the selling pressure resumed, pushing the price down through multiple support levels. The stock broke below $620 and then sliced right through the $610 level yesterday. This shows that sentiment remains very fragile, and any negative news is enough to trigger another wave of selling. Right now, the price is struggling to hold above the critical $600 psychological level. The hourly trend is definitively bearish, and traders should be cautious about trying to catch a falling knife here. Resistance on this time frame is now established at the breakdown points of $610 and, more significantly, around $620. Finally, let's drill down to the 15-minute chart to see what's happening in the very short term. This gives us a look at the intraday price action from the last couple of days. Yesterday, We saw a steep decline in the afternoon, culminating in a low near $603 before closing near $609. Today's price action, according to pre-market data, is starting even lower, around the $604 mark. For day traders, the key battle is happening right now around this $600 to $605 zone. A sustained break below $600 on high volume would likely signal the next leg down, with short-term targets in the $590s. Conversely, if buyers step in and can defend this level, a bounce back towards yesterday's resistance area of $610 to $612 could be in the cards. Volume will be key today. Watch for an increase in volume to confirm the direction of the next move. So, to recap the key levels and potential scenarios we've discussed. Major long-term resistance is at the all-time high of $796 and the pre-crash level of $750. More immediate resistance sits at $620, then $640. On the support side, the current battle is at the psychological $600 level. If that fails, the next major support zone to watch is between $575 and $585. Now for some unbiased predictions. Given the current bearish news cycle and the technical breakdown, I believe there is a 60% chance we see a test of the $575 to $585 support zone in the coming weeks. This likelihood increases significantly if we get a daily close below $600 with strong volume. There is a 25% chance the stock consolidates and builds a base in the current $590 to $620 range for a while before making its next major move. And there is a 15% chance of a sharp reversal from here, likely driven by a positive broader market catalyst or some unexpected good news from the company, with an initial target of reclaiming the $640 resistance. Keep an eye on trading volume and overall market sentiment, as these will be critical indicators for Meta's next direction. Remember, this content is for informational purposes only and is not financial advice. You should always conduct your own research and consult with a professional before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.